Yes, hello, hi everyone. Welcome to the CMA final indirect taxes input tax credit question practice video. हम क्या करने वाले हैं? So in this video we are going to discuss 20 questions of input tax credit. These 20 questions are the past 5-6 attempts revision test paper, question paper and mock test paper questions. So basically these are the questions which were asked for that compulsory question 114 marks in RTP past exam and MTP of last 5 attempts. So starting from 2021, I am taking all the attempts question in this particular video. The question bank that I am using is version 4 of our question bank only, PDF of which is already shared on the Telegram channel. The link of Telegram channel is in description of this video. So you can download, take print of the question bank and also solve questions with me. This annotated PDF that I'm going to use in this video, where I've in short written all the adjustments to save your time. This annotated PDF is also already shared on the Telegram channel. That also you can download. The link is available in description of this video only. Chalo. Are you all active with me? Now in our question bank for input tax credit chapter, there are total 51 questions. These 51 questions cover everything: ICAI study material, mock test paper, revision test paper and past paper. Till past 5-6 attempts we have covered everything that is relevant for you. The first 30 questions from this question bank are already uploaded on YouTube in Hindi language also, in 100% English language also, in the same Q&A playlist that you are referring now. So in Q&A playlist you can go to the playlist section, go to the Q&A series or Q&A playlist and you will find the first 30 questions of input tax credit which are mainly of ICAI study material. Now in this lecture, the next 20 questions which are pending, starting from question number 31 to question number 51, these next 20 questions which are past 5 attempts, RTPs, MTPs and question paper is what we are going to solve in this particular video. I hope everything is clear to you. The Josh is high and you are all set with me to solve all the questions and secure those 14 marks in examination. I will make you solve each and every question along with each and every adjustment. Chalo. Quickly drop some heart, fire, bomb emojis in the comment section. Drop me a hi that yes, you are all active with your question bank, rough page, pen and a calculator. That is all that you need to solve the questions with me. Also keep your handwritten notes alongside. Koi bhi provision refer karna ho, if you want to see anything from the notes, it should be handy with you. I'll give you the page number reference that see this provision is given here, see this provision is given here. So it will be very useful for you if you keep your notes alongside while solving these questions. Chalo. Shall we start, everyone? Done, ma'am. Let us start in reverse order. We start with the last question, question 51, because in reverse order, these are the recent questions, like the May 2024 question paper, May 2024 RTP, MTP, and so we go like May 2024, then 23, then 22, then 21. So we are going in the reverse order, the latest questions first. Okay, starting with question number 51. Sitaram Industries Limited, a registered entity under GST in the state of Karnataka. So the supplier is in the state of Karnataka. Engaged in manufacture and supply of both taxable and exempt goods and services. We are manufacturing both taxable as well as exempt goods. Outward supplies details given. Okay. Then some notes also given. And what is the question asking? All the amounts given are exclusive of GST wherever applicable. From the information, you are required to compute the eligible ITC available for set-off and minimum GST payable in cash. Basically, we have to calculate the liability also and the ITC also. So, it's a full computation question. For the month of October, this is very important. You always have to mark that for which month they are asking you to calculate the liability, because it might be possible that some data that they have given in the question pertains to some another month. Let's say they say that we received the invoice, the bill in October month only, but the goods were received later on. Then in that case, you cannot claim the ITC in October month. So it is always important to note the month for which they are asking you to calculate the liability. So in this question, the liability is to be calculated for the month of October. The rate of GST are 18% for both inward as well as outward, except for one special packing box that they've given in the question. The rate is 12%. जो भी good services दिया है सब पे 18% का rate लगेगा. Only for special packing boxes, the rate given is 12%. चलो, let us start one by one. sold an old warehouse building in the state of Karnataka to a retail giant in the same state. Now tell me, if we have sold an old warehouse building, it is a sale of land and building which is outside the purview of GST. We have studied Schedule 3 negative list FB changes where S means sale of land and building. Therefore, no GST on the same. Done. Then second, there is this small printing mistake in this question. This point is skipped up. Please write this point with this bracket. The main point here is supplied 30 laptops over the counter to Mr. Sudhakar, an unregistered buyer who took it to his Haryana residence. Invoice issued to him mentions only his name and state. However, his complete address of Haryana is missing in the invoice. Now, in the chapter of place of supply, section number 10 IGST Act, we have studied that if an unregistered person is purchasing any goods over the counter and in that case he gives his state name while the making of invoice, that state only becomes the place of supply. एक unregistered person कोई goods खरीदने आया, उसने काउंटर पे बता दिया कि इन goods को मैं इस स्टेट में लेके जाने वाला हूं, वहां पे यूज करने वाला हूं, तो हम उसी को प्लेस ऑफ सप्लाई मान लेते हैं. अदरवाइज फिर नॉर्मली जहां डिलीवरी दिया जाता है वो प्लेस ऑफ सप्लाई होता है. नाउ इन दिस केस, even if you are not giving your full address, you are only giving the state name from where you are, that is also fine. That state only becomes your deemed place of supply. Open section 10 of IGST Act and you will find this point. So here in this case, because the recipient has said that he is going to take the goods to Haryana, Haryana only becomes the place of supply. The supplier is from Karnataka and the place of supply is Haryana, which means IGST will be applicable. IGST at the rate of 18%. And special boxes for packing of the laptop. Now tell me, laptop plus laptop box. Laptop plus laptop box is a composite supply. So even though the question says that for special packaging of laptop boxes, the rate applicable is 12%. Still we know that for all other goods services in question, the rate applicable is 18%. Therefore, in this question also, the rate applicable will be 18% on entire laptop plus laptop bag, because it is a composite supply and principal supply here is laptop and not laptop bag, which is taxable at the rate of 18%. So, place of supply Haryana, interstate supply 18% GST applicable. Done. We'll keep checking the answer alongside only. So, see. Sale of old warehouse building, schedule 3 outside the purview of GST, then laptop plus laptop bag taken together, taxable at 18% IGST because place of supply is Haryana. Done. Then next point, provided direct selling agent service to Kumkum Bank registered in Karnataka. Now the supplier here is a company, limited, body corporate. Now tell me, direct selling agent services if provided to bank attracts reverse charge mechanism, but the condition was direct selling agent has to be an individual direct selling agent. Individual direct selling agent अगर बैंक को सर्विस देगा तो RCM लगता है. Here the supplier is not individual but the supplier is a body corporate. Therefore no reverse charge mechanism will apply, and here Sitaram Industries will have to collect GST under forward charge mechanism and pay it to government. Do you remember section 9(3) CGST Act, charge of GST chapter? Direct selling agent has to be an individual to attract RCM. Therefore, entire 4 lakh C plus S GST 18% forward charge mechanism. Here also Karnataka, here also Karnataka. Therefore, C plus S GST forward charge mechanism will apply. Got it. After that, provided pure labor services pertaining to a single residential unit in Mumbai, Maharashtra, otherwise than as a part of residential complex for erection and installation of renovation work. Now, exemption chapter construction point. I will not keep opening the handwritten notes again and again, otherwise solving 20 questions will take 5-6 hours. I will keep giving you the references of chapter and section number. You can pause the video, open the handwritten notes, go there and see the provision. Okay. So in exemption chapter construction point, we have studied that if a residential unit is constructed and it is the original works of construction, then it is exempt under GST. But repair and renovation is not exempt under GST. Do you recall this? Chalo, 1 or 2 times I'll show you so that you get an idea how to refer. So come here. See here. Come to exemptions chapter. Exemption chapter construction block. Pure labor contract of construction, erection, commissioning and installation. Original works pertaining to single residential unit are only exempt. Renovation is not mentioned here. Therefore, even though it is pertaining to single residential unit, but it is renovation, therefore it will be taxable. We are in Karnataka, the place is in Maharashtra, and therefore immovable property, where the property is that becomes place of supply, which means Maharashtra will be the place of supply. Supplier is in Karnataka. IGST 18% will be attracted. Hey, come on, I want you all to give answers in the comment section. Next, provided free of cost training in a resort to Puducherry to its agent based in state of Karnataka on effective usage of products. Now, first of all, Schedule 1. This is a supply without consideration. Free of cost, they are saying. So, for free of cost supply without consideration, we have to check Schedule 1. Now, Schedule 1 has a point saying that if principal supplies to agent or agent supplies to principal without consideration, it is a deemed supply, but only and only goods are covered there. Open supply under GST, Schedule 1, Section 7. What does it say? That only goods supplied between principal agent are considered as deemed supply without consideration. But this is a training service. Now, training service is not covered under Schedule 1. Therefore, no consideration, no supply and no GST will be charged on the same. Schedule 1 covers only goods as deemed supply between principal and agent, but here services are given and therefore no GST. Interest on fixed deposit from Sulakshan Bank registered in Karnataka. Again, we know any interest or discount income from giving loan deposit advance is exempt under GST. So, no GST on the same. Done. So, these are all the outward supplies. Pure labor services taxable, training no. Then we say here, okay, we have some more points that we will see later on when we come to the notes. Chalo, now moving on to inward supplies. Received a debit note in respect of inward intrastate taxable supplies received from in the financial year 2020-21. For the quantity difference as agreed, these inward supplies were used for all goods manufactured in factory. Date of debit notice 16 October. Now see, first of all, Section 34. There is no time limit to issue debit note. There is only time limit to issue credit note. There is only time limit to issue credit note. Debit note can be issued anytime. So, even if the invoice is for FY 2020-21, no problem. Today in this month, October 16, 2023, if a debit note is issued, it is okay and valid. Now, can I take ITC of this debit note is the question. Then, ma'am, last date to avail ITC is 30 November or annual actual date of annual return, whichever is earlier from the date of debit note. So, debit note is issued on 16 October 23, which means it is FY 23-24. So, I can take ITC of this debit note till 30 November 24 or actual date of filing annual return, whichever is earlier. So, even if the invoice is for FY 2021, nobody can stop me to take ITC because I am not taking ITC of that invoice. I am taking ITC of the debit note, and debit note is issued. Debit note is issued in this current month only. Therefore, I can take ITC. The question itself is saying it is intrastate supply. Therefore, C plus SGST 18% ITC I can take. Solar panels installed in the factory for providing electricity used in the factory. Now, Section 17(5), any construction of immovable property, ITC is blocked. Be it construction, be it works contract. Now, solar panels, of course, are a part of building only, are a part of your civil structure, building immovable property. Therefore, ITC for such construction or works contract of solar panels will also be blocked under Section 17(5), which means I will say no ITC available for this 5 lakh. Then purchased employee uniform for employees interstate uniform are total 7 lakh, out of which 3 lakh are necessary to ensure the safety, but the remaining are given to employees for their personal purposes. Now we know personal purposes ITC is always blocked. So this 4 lakh that is given for personal purpose, ITC will be blocked under 17(5), but 3 lakh the official use uniforms, ITC will be available because it is interstate. I will take IGST at the rate of 18%. Then we say, in respect of sale of old warehouse building, the stamp duty value was 32 lakh. Actual sale amount was 30 lakh, but the stamp duty value was 32 lakh. Okay. Then we say, the company provided a corporate guarantee of 2 crore to Lakshmi Logistics, its related company. Now tell me if you are providing corporate guarantee to your related company, Rule 28 Sub Rule 2. We have already studied that corporate guarantee to related Corporate guarantee to related company will be simply actual consideration or 1% of the guarantee amount, whichever is higher. Because actual consideration is not given in the question, so we will take 1% of the guarantee amount. Guarantee amount is 2 crore, 1% of it comes as 2 lakh. 2 lakh becomes the value of supply. Now, in this case, 2 lakh is value of supply. We are from Karnataka, supplier from Karnataka, place of supply also Karnataka. So here we will take C plus S GST at the rate of 18% on 2 lakh rupees, which is 1% of 2 crore coming as the value of supply according to rule 28, sub rule 2. Got it, ma'am. After that we say, the accountant of the company did not claim ITC in respect of debit note because he is saying that the debit note is pertaining to some invoice of an earlier year. No, we already know. We already know there is no time limit to issue debit note. So even though accountant is not taking ITC, we can tell accountant that, hey accountant, listen, ITC is eligible and you can take this ITC. Therefore, ITC will be allowed because there is no time limit to issue debit note. Last 2 points we have already read. So we've seen all the outward supplies. Right, interest is exempt. Then we've seen all the inward supplies, that for debit note ITC will be available, solar panel no, uniform purchased only 3 lakh, ITC will be available. Now understand that this debit note was particularly for a taxable supply, but these uniforms are used by employees and employees are working for both exempt as well as taxable supplies, because we have both the kind of turnover, which means we have to apply provisions of common credit here. Rule 42, reversal we have to do. Now see, what is the common credit? Common credit on receipt of debit note, okay, debit note they are saying it is used for all goods, is it? Debit note is not only for taxable products, debit note is for all goods. Yes, they have not anywhere mentioned whether the debit note is for taxable or exempt. So of course we assume that the debit note is common. Got it? So we are calculating the common credit. So debit note is for common and uniform is also for common. So we have total 54,000, 36,000 and 36,000 as the common credit. Now to apportion this common credit, I need E by F, exempt turnover upon total turnover. So let us calculate exempt turnover and total turnover from the question. So first of all we know that if you are selling any warehouse or building, even though it is not a supply, but at the stamp duty value you have to include, it in E also as well as F also. So I am doing calculation of E here, calculation of F here. So this was sold for 30 lakh, but the stamp duty value was 32 lakh. 32 lakh will come in exempt also, 32 lakh will come in total also. Then we say this laptops supplied, this will come in total only. So 12 lakh plus 1.3 lakh in total. This is not exempt, of course. Direct selling agent, see, if it would have been RCM, then it would form part of E. Because the recipient is not paying under RCM, this is a normal forward charge transaction. Therefore, I will take entire 4 lakh in my total turnover only. Pure labor services, again taxable 6.2 in my total turnover. Then free of cost training, not a supply only. Now interest, even though it is normally exempt, but for the computation of reversals under GST, we do not consider interest as exempt, and therefore interest will not come in E and interest will only and only come in F. So the interest of 2 lakh received will form part of total turnover. Correct. Then these are all inward supplies, and plus we have this one more supply, corporate guarantee of 2 lakh. So corporate guarantee of 2 lakh also forms part of total turnover. Quickly make a total and tell me what is the total turnover. 32 plus 12 plus 1.3 plus 4 plus 6.2 plus 2 plus 2. So the total turnover comes as 59.5 and the exempt turnover is 32 lakh. Let us quickly check the answer. Chalo, yes, 32 lakh is the exempt turnover and 5950 is the total turnover. Common credit we already know, IGST 54,000 and CGST SGST 36,000. So by doing common credit into E by F, you get the reversal amount. You will simply reduce this reversal amount from the ITC that we have taken, and then the remaining ITC will be allowed to you for the set off of the outward tax payable. We know the manner of utilization, therefore you can use this ITC to set off your payable. Quickly tell me, is it clear to everyone? Very good question this was. It covers reversal provisions also, and there is no as such exempt supply. There is only one supply of land and building. So because of that, you will have to remember that this will form part of E also and F also, and you will have to do reversal. Otherwise than that, all the normal supplies are taxable only. Interest, even though is exempt, but does not form part of exempt turnover, and therefore no reversal required for interest. Here we complete question 51. Chalo. Are you all with me? Proceeding towards the next question, question number 50. After completion of every question, you will in the comment section let me know that yes ma'am, we have understood. Let's proceed further. Chalo. Purva Impex Limited, a registered entity under GST in the state of Maharashtra. We are always, you have to see which state we are registered in so that location of supplier is fixed. Then we only have to see place of supply and determine whether intrastate or interstate. Second thing, you always have to see for what month the question is asking you to calculate the liability. The question here is saying we don't have any opening balance of ITC. From the above information given, we are required to compute the eligible ITC available and also the minimum GST payable for the month of April. A full computation question again. Chalo, let us start. What are the rates of GST given? Okay, so they are saying that the rate of GST everywhere is 18% only for inward, outward, everything except TV stand, which is taxable at 28%. So one TV stand for 28%, rest everything is 18% only. All amounts are exclusive except specifically written, everything is common only, used for both taxable as well as exempted supply. This gives us a hint that okay, rule 42, rule 43 might come into picture. Nothing is used for personal purpose, which means full ITC will be available for everything if it is completely taxable. Okay, understood. Chalo. Let us start one by one. Sold a future. Now, because we know there are reversal provisions, we will start calculating E by F hand to hand together only. Because anyways, at the end, we have to do reversals. Sold a future derivative contract at NSC which was due in the month of April. Said contract had no delivery option. See, understand, if forwards and futures settled by delivery, then normal GST applies. If they are net settled, cash settled without delivery, then no GST applies because securities are neither goods nor services. Therefore, no GST implication will come on this. But we know for the purpose of reversals under ITC, we have to take the securities at their sale value in exempt turnover also and in total turnover also. So my sale value was 20 lakh. I have to take 20 lakh in exempt also and 20 lakh in total also. Got it. After that, supplied 50 LED televisions at Hyderabad to the state government of Telangana. 50 LED televisions at Hyderabad. We are in Maharashtra and recipient place of supply is Hyderabad, Telangana, which means this is IGST interstate supply, and along with TV stand are also given. Now tell me, TV plus TV stand. TV plus TV stand is a composite supply. The question just now said TV stand taxable at 28 but TV at 18. Being a composite supply, what is principal? TV or stand? Of course TV. TV is principal, and therefore we say that TV will be taxable along with stand at the rate of 18% only, and on entire 8,72,000 IGST is going to apply. So 8,72,000 being a fully taxable supply will form part of my total turnover. Understood. Provided an intrastate service as a direct selling agent to Uday Small Finance Bank. Now see, here again we are a body corporate. Body corporate providing direct selling agent services. No RCM will come again. No RCM will come again because we know that RCM only involves individual direct selling agent. RCM only involves individual direct selling agent. Here the person providing the DSA services is a body corporate. Therefore, no RCM will apply, and this 5 lakh is going to be properly normally taxable under forward charge mechanism, forms part of my total turnover, not exempt because no RCM. Got it. Now we are from Maharashtra. The bank is in where? DSA to Uday Small Finance Bank for their retail loan product. Now this is intrastate. Intrastate, which means C plus S GST 18% RCM I will apply. Not RCM, sorry, FCM. Then passenger transportation service provided to general public by company owned ferries between two islands in the state of Maharashtra. Purpose was to facilitate daily commutation of the local people. We have studied this in transportation. Inland waterways transportation. Inland waterways transportation. Two islands in the state of Maharashtra only. This is inland transportation other than tourism. Daily commutation. Daily commutation, inland transportation is exempt under GST. So no GST will come on this, and this 1.2 lakh forms part of my exempt turnover also and my total turnover also. Got it, ma'am. Do you want me to show you this exemption entry? See, transportation by waterways, inland waterways are exempt under GST. Page number 128 of the handwritten notes version 4. Okay. After that, goods supplied goods to its agent in the state of Bihar. Open market value of the goods were 3 lakh and the goods were further supplied to unrated customer at 3 lakh 20,000. Now goods supplied to agent. Goods supplied to agent without consideration is a deemed supply under schedule 1. Deemed supply under schedule 1 and the value is found out according to rule 29. Now rule 29 simply says that open market value or 90% of whatever is charged from customers unrelated. So open market value given here is 3 lakh and 90% of 3.2 lakh comes as what? Tell me. Whichever is beneficial we will take. 3.2 lakh into 90 percentage comes as 2.88 lakh only. So 3 lakh or 2.88 lakh, whichever is lower. So I will take my value of supply to be 2.88 lakh because agent is from Bihar. We are not from Bihar, which means this is in IGST, interstate supply, taxable at 18%. Got it. Passenger transportation exempt we saw, direct selling agent forward charge we saw, 50 TV along with the stand IGST we saw, and futures derivative security neither goods nor services. Therefore no GST. All these things we've seen already. After that, okay, these were all about outward supply. Now availed HR training services for its employees from Be Humble, an HR firm registered under GST in Maharashtra. Training was held at Himachal Pradesh. Now see, understand, we recipient are registered persons in the state of Maharashtra. We have taken services from some training institute which is also in Maharashtra. So location of supplier is in Maharashtra. What is the place of supply? Tell me. Recipient is registered in Maharashtra, but the training was conducted at Himachal Pradesh. What will be the place of supply? Ma'am, we have studied in section 12 IGST Act that if training appraisal services are provided to a registered person, always the location of registered person becomes the place of supply. If it is provided to unregistered person, in that case the place where training is conducted, that becomes the place of supply. Now here, because the recipient is a registered person, therefore where the training was conducted is completely irrelevant. We are registered in Maharashtra, therefore Maharashtra only becomes place of supply, which means C plus S GST ITC I can take. Understood everyone? Say yes or no. If training services provided to any registered person, it always place of supply will be the place of that registered person only. So place of supply becomes Maharashtra, supplier also in Maharashtra, therefore C plus S GST. Purchased processing machines from David and Company registered under GST in the state of Gujarat. Machines were bought in as is where is condition at Gujarat only to produce taxable items. Now see, understand, we purchased the machine from Gujarat, kept the machine at Gujarat, destination is Gujarat only. So place of supply becomes Gujarat and we are registered in Maharashtra. Now here I will say that the recipient is in Maharashtra, but the place of supply is Gujarat. Supplier is also in Gujarat, which means the supplier will charge C plus S GST of Gujarat state. The person from whom I have purchased the machine is in Gujarat. Supplier is in Gujarat. Place of supply also Gujarat, but the recipient is in Maharashtra, which means C plus S GST of Gujarat state will be charged, and this ITC will not be available for set off in my Maharashtra state. Therefore, I cannot take the ITC. ITC as such is eligible. If this would have been an IGST credit, it would have been eligible. Because it is Gujarat state C plus SGST, which will not be useful for me to set off in Maharashtra state. Therefore, I cannot take this ITC. Got it. Purchased 5 two-wheelers with engine capacity 25 cc, which is for outside the factory producing taxable products only. So we are saying that this two-wheeler is purchased for employees within and outside factory producing taxable products. So, supply was made at Mumbai by a registered dealer at Tamil Nadu. Now see, understand, here any motor vehicle, two-wheeler or three-wheeler, engine capacity up to 25 cc ITC is allowed. Refer section number 17(5) blocked credit that we have studied. Motor vehicle normally designed to carry passengers, ITC is blocked. But if the motor vehicle is a two-wheeler or a three-wheeler whose engine capacity is only 25 cc up to, in that case ITC is allowed. Here it is exact 25 cc. Therefore, ITC of this 2 lakh is going to be allowed to me. This is not going to be blocked. Understood. After that, company wishes to choose most beneficial for agent. Yes, we know. According to rule 29, we already chose the most beneficial answer. Then what most beneficial, ma'am? See here. 3 lakh or 90% of 3 lakh 20. Then company transferred certain taxable items to its Kerala branch for distributing as free sample on the occasion of inauguration of the said branch, which is yet to be registered. Value declared in the invoice for transfer was 2.5 lakh, whereas open market value was 3 lakh. Kerala branch has not yet sold any such kind of goods to customers. Same PAN, separate registration, distinct person. We have supplied to our own distinct person. Now supplying to own distinct person simply means you have to consider rule 28 to determine value of supply. Now see, if my recipient is eligible for full ITC, in that case whatever we declare in the invoice, that is accepted. But here, because recipient will distribute these goods as free samples, therefore recipient is not eligible for full ITC. If recipient is not eligible for full ITC, then in that case we will say that normal rule 28 says that is open market value available, take that. Yes, open market value given in the question is 3 lakh, and therefore my value of supply is going to be 3 lakh. So my value of supply here is going to be 3 lakh, IGST of course, because it is interstate supply. So your 3 lakh will become again part of my total turnover. Got it, ma'am. So here we calculate the total payable. Then we need to calculate the ITC. For HR, we saw machine purchase no, because Gujarat. We saw this. Two-wheeler, three-wheeler ITC will be allowed. Now, this is the common credit. The 36,000 plus 36,000 is the common credit. Why only this, ma'am? Because see, the two-wheeler that we have purchased, no, they have specifically written in the question that this two-wheeler is particularly only for taxable product. If the two-wheeler is only for taxable product, which means full ITC of this two-wheeler will be allowed. Other than this, what is the ITC available? HR training. Only this is the common credit. So only 4 lakh into 9%, 36,000 plus 36,000 C plus SGST is the common credit available with me, which I have to apportion. So now my exempt turnover is 21.2 lakh, and what is my total turnover? My total turnover is 20 plus 8.72 plus 5 plus 1.2 plus 3, which comes as 37.92. Let us quickly check. One second. Exempt turnover is 1.4. What mistake did we do here? Oh, sorry. For any securities that you sell, we have to take 1% of the sale value, not the total sale value. Very sorry. For any securities that we sell, we have to take 1% of the total sale value. So 20 lakh into 1% we have to take, and here also 20 lakh into 1% we have to take. So now I will say, why did you all not even point out this thing to me? That for any sale of security, we have to take 1% of the sale value. So we will say 20 into 1%, which is 0.2 plus 1.2, which comes as 1.4. Yes, now it makes sense. Then 20 into 1% plus we will do 8.72 plus 5 plus 1.2 plus 3, which comes as 18.12. This now matches with the answer, right? Again, we've made some mistake. 1.4 is correct. This is 21. What did I miss? Agent I have taken 3 lakh Kerala. 3 lakh Kerala also I have taken. Okay, agent I have not taken. No. Plus what we've supplied to agent is 2.88. Plus agent is plus 2.88. Okay. Now this is 21. Chalo. We forgot. Yes, we forgot to take the agent wala point in total turnover, which is 2.88. Right. So here now, this, whenever you sell security, you take 1% of the same and 2.88 for agent. So this is exempt, this is total. We know the common credit is 36,000. Multiply by, you do E by F. Whatever answer comes, you will reduce it from the ITC and then use the ITC to set off the outward liability payable. Done. We complete question 50 here. Quickly drop me a thumbs up that ma'am understood and clear. Then also it will be a related person only, Sakshi. Sure. Next point, question 49. Sudarshan Limited is a registered supplier under GST in the state of Kerala, is engaged in providing a bouquet of goods and services other than renting of cars. So we are not in the business of renting of cars. Other than that, we do a lot of goods and services. Provides following information for the month of January. So what we have to do is for the month of January, and we are registered in the state of Kerala. You always have to see the location of supplier, lock it, and you also have to see that the question is pertaining to which month. So they are saying compute everything for the month of January. All amounts given exclusive, all the rate applicable 18%. Preceding financial year turnover was 180 lakh, which is greater than registration limit, which means if at all there is any legal service, arbitral tribunal, we know that we will apply RCM because the preceding financial year turnover is greater than registration limit. Yes. Now one by one, let us read the point and solve the question. Outward supply distributed 1,000 free gifts, electronic items worth 5,000 each purchased from unregistered local vendor to its customers within Kerala in the month of January to promote sales. When we purchased, at that time it was purchased from unregistered persons, which means we had not taken ITC then also, and now when we are selling, we are not actually selling, we are gifting them as free gift. Now free gift, we know section 17(5), any goods lost, destroyed, stolen, written off, given as free gift or sample, ITC is not allowed. Also, it will not be a supply. See, even if we had purchased from registered person, still ITC won't be allowed, but here we have anyways purchased from unregistered person. So, block ITC, no point for that. But in case of free gift, no consideration, no supply. We have also given the gift to customers who are not related to us, which means it is not even falling under Schedule 1. No Schedule 1, because for Schedule 1, see, permanent transfer also, if ITC availed, then only it comes in para 1. If the opposite person is a related person, then it comes in para 2. Here the customers are not related because we purchased from unregistered person. We have not even taken ITC. So not falling in Schedule 1 para 1, not falling in Schedule 1 para 2, which means this will particularly not be a supply and no GST will be applicable. No GST will be applicable. Got it then? Supplies a consignment of goods in the territorial waters to Dhruv Tara. The territorial waters is located at a distance of 11 nautical miles from Kerala and 12 nautical miles from Tamil Nadu. Now tell me, whenever we supply in territorial waters of India, we take the place of supply to be the nearest coastal state or UT at the baseline. Now nearest coastal state UT would be 12 or 11, of course 11 nautical miles, which means place of supply is Kerala. Supplier is also in Kerala. C plus S GST on this 6 lakh is going to be charged. So free gift nil, then 6 lakh C plus S GST will be charged. Next point, advance received during the month for future intra-state taxable supply. Now out of 7 lakh advance that we have received, 2,10,000 is for goods and the rest is for service. Now for goods we know time of supply comes for invoice, last date of invoice, whichever is earlier. For goods, time of supply does not come at the time of advance. Therefore, no GST today will be payable on advance received for goods. But for services, we know that time of supply comes for advance because it is invoice payment earlier. If invoice not issued within time, then also time of supply is service payment earlier. So, any situation if payment date is coming early, if advance is received for any advance, GST is applicable because time of supply comes for services. So, from entire advance of 7 lakh, I will say that for goods, time of supply is not coming because section 12 says that you have to take invoice or last date of invoice, whichever is earlier. And this is only payment, no invoice, no last date of invoice. So, goods I will ignore. Services 4,90,000. Services only 4,90,000 because the question is saying it is intrastate. C plus S GST 9% charged. Got it. Then after that, provided pure labor services for construction of a single commercial unit. Matter over. Construction is for commercial unit. We get exemption only for residential unit. This is a commercial unit and therefore IGST. Why IGST? Because again, we are in Kerala and the immovable property is in Maharashtra, Mumbai, which means Maharashtra becomes the place of supply. Supplier in Kerala. This is an interstate transaction. IGST on 15 lakh will be applicable. 15 lakh into 80%, 18%, 2,70,000. IGST will be applicable. After that, inward supplies they are saying, monthly rent paid to Kerala state government for an office taken on rent. We know government giving immovable property on rent to someone, consideration up to 5,000, exempt greater than 5,000, RCM is applicable for that registered person. So if you are taking any property on rent from government, you have to pay reverse charge mechanism. So on this 6 lakh, now the building, the property taken on rent is also in Kerala, supplier also in Kerala, place of supply also in Kerala, which means C plus S GST 6 lakh. I will pay RCM and I will also get the credit of the same. So I will simply say that on 6 lakh C plus S GST, I will pay RCM and while computing my credit, I will also include it in my total credit. After that, purchased raw material from Saksham Steels Limited, registered in the state of Andhra Pradesh. As of now, everything seems okay that we have purchased raw material, we should be eligible for ITC. But there is this point given here which says that Saksham Steels Limited is mandatorily required to issue e-invoice. However, it did not generate a valid invoice reference number. Now tell me, an e-invoice without an invoice reference number is not a valid invoice only. Open the chapter of tax invoice, credit and debit note, go in the e-invoicing point. In there, I have particularly written this point that without invoice reference number, e-invoice is not a valid invoice. Without a valid invoice, you cannot claim ITC. So here I will say, even though I have purchased, but because there is no IRN, invoice is not valid and therefore no ITC of this 15 lakh will be allowed. Got it. After that, we have purchased a new truck from a dealer in Cochin, Kerala for transport of materials. Now see, normally we say that for passenger transportation services, the ITC on motor vehicles is blocked. But this is not passenger transportation services, this is goods transportation services. For material, if you are taking any motor vehicle, then ITC is allowed. But this point says that company has claimed depreciation under Income Tax Act on the new truck, including the taxes. Now section 16(3) ITC, if you remember. Section 16(3) ITC chapter C GST Act says that if you are taking depreciation on your capital goods under Income Tax Act on the GST component, then you cannot take credit of the same. You can capitalize the truck, you can take depreciation on the truck, but on the GST amount of the truck, which is the tax amount of the truck, you cannot capitalize it. If you do so, you will not be allowed to take ITC. You either take depreciation or credit, not both, because we have already taken depreciation. Therefore, no ITC on the GST component for new truck will also be allowed to us. Got it. After that, during the course of arranging and filing documents, accountant of Sudarshan Limited observed that an invoice of 96,000 dated 2nd December of last year was omitted to be recorded in the books of accounts and no payment was also made. We mistakenly missed an invoice to record in the books. We have not availed ITC. We have not even made any payment. This invoice was issued by Mr. Riddhi of Kerala, from whom Sudarshan Limited took cars on rental basis, including cost of fuel. Now tell me, car taken on rental basis, renting of motor vehicle including cost of fuel, renting of motor vehicle including cost of fuel supplied by Mr. Riddhi, not body corporate, to Sudarshan Limited, body corporate, and the rate of GST applicable, is 5%. Yes, then in that case, tell me, will RCM be applicable? See, we have studied this point. That supplier should not be a body corporate. Recipient should be a body corporate. In that case, we will say that renting of motor vehicle RCM has to apply. In this question, whether they have said that the rate is 5%. No, it is their assumption. That on this renting of motor vehicle, the rate is 5%. Ideally, they should have mentioned, but in this question, they are giving hint that it is not our business and etc., which means it is somewhere related to reverse charge mechanism. Ideally, they should give the rate, that renting of motor vehicle rate is 5% here, so that there is absolutely no ambiguity that supplier not body corporate, recipient body corporate, rate 5%, which means on this reverse charge mechanism will be applicable. But now we have to see the time of supply, because we have to calculate the liability only and only for the month of January. If time of supply falls in January, then we will pay RCM, avail ITC. If it is not falling in January, then we will not pay RCM today. Okay. So now, in case of services, reverse charge mechanism, time of supply, section 13(3) says that the day on which you make payment and 61st day from invoice, whichever is earlier, becomes the time of supply. Now they are saying that we have not yet made payment only. So payment date is not available, payment date has not arrived only because no payment is made till date. But 61st day from invoice we can calculate. Invoice was 2nd December, which means 31 minus 2, 29 days of December, 31 days of Jan, and 1st day of February comes as 61st day. Yes, so the time of supply here will be 1st February. Therefore, we need to pay the RCM in the month of February and we are calculating GST liability for the month of January. Therefore, no adjustment of this point will come in answer. You will have to of course show this working note to them that because time of supply is falling in the month of February, while calculating the liability for Jan month, no need to pay any RCM, no need to avail any ITC. This will not have impact on the answer, but of course a working note will be required for the same. Availed services of an arbitral tribunal in Kannur, Kerala worth 7 lakh to settle a case relating to Companies Act. Now, because we've taken services of arbitral tribunal, we know services by arbitral tribunal to business entity whose preceding financial year turnover is greater than registration limit. RCM is going to apply and ITC will also be available. We are in Kerala, arbitral tribunal also in Kerala, which means C plus S GST 18% of 7 lakh. So 18% of 7 lakh C plus SGST I will pay and I will also take credit, and I will pay under reverse charge mechanism and I will also take credit of the same. This was a very simple question. No provisions of reversals etc. also involved here. All the supplies are kind of normal supplies. So no rule 42, 43 also coming here. Simply total outward payable, total ITC. You set off the ITC against outward payable plus add whatever is payable under RCM in cash and your question is over and done. Chalo. Are we confident everyone? Of course this session is going to be long because this is the 14 marks computation question. Every question on an average takes a time of 15-20 minutes and we have to solve 20 questions. So you know the session will be long. Just be there with me. Chalo. Next question number 48. Vasudev is a mining contractor. He has crossed the threshold limit for registration in the preceding financial year 2022-23, is now registered under GST in the state of Gujarat. First thing that we need to see, supplier is in the state of Gujarat. Transactions for April month are given. What they are asking, that for zero rated supplies, we file bond LUT. Now rate of GST on goods is 5%, but on services it is 18%. So while computing, you will have to take note of this, whether it is goods or service, decide the rate accordingly. So we will say that goods is 5% and services is 18%. There is opening balance 34,000 in the cash ledger. See, do not miss this. First of all, you calculate your outward liability, minus you reduce ITC, plus whatever is payable by cash under RCM, you will add that. And here at the end when you get the figure that this is what you need to pay the cash, again now you will reduce 34,000 from this because 34,000 is already available with me in the cash ledger. And then I will say that the remaining amount is what I need to pay using a challan. Do not mistakenly take this 34,000 as ITC and set off it here. No, this is not ITC. This is my cash ledger balance. Cash ledger balance is never available directly with ITC as set off. You first set off your all credits, add the RCM liability, and then finally whatever is payable by the cash, from that you can reduce this cash because it is already there in your cash ledger. Got it. ITC we have 15,000 in IGST. So IGST opening balance credit is 15,000. CGST and SGST 50,000 in CGST and 9,000 in SGST. These are my ITC opening balances in which I will add my current month ITC and then total ITC will be available for set off. This is cash ledger balance. Do not mix it with ITC. Always keep this thing in mind. From above details, compute minimum net GST payable for the month of April. So for April month, computation question is asked. Okay, April month and we are from Gujarat. Let us start. Vasudev is an operating member in mining and exploration services at Aliabad Oil Field, Bhavnagar, Gujarat. He has provided certain services to JV at the site in which he is also a member. So operating member providing services to JV, tell me. We have studied this clarification in the chapter of supply, that if you are giving a normal capital contribution or a cash call, that is a mere transaction in money, not taxable under GST, not a supply. But when as a member of JV, you are giving any service to JV, that service becomes taxable. Now, he believes that consideration is cost recovery, not taxable. Whatever he believes is not relevant to us. We know that an operating member of JV, if gives a service to JV, it is always taxable. We are in Gujarat, JV also in Gujarat, which means C plus SGST 18% on 15 lakh will be applicable. So 15 lakh C plus SGST 99% because giving service to JV, service attracting 18% in this question, goods 5%. He has purchased certain machine from Mumbai, Maharashtra to render service to JV at Aliabit oil field. We have purchased a machine, simple. Machine is a goods, so will be taxable at 5%. Machine purchased from Maharashtra. So in this case, supplier is in Maharashtra, but we are bringing the machine at Gujarat oil field, which means destination of the goods is Gujarat. So ITC will be available at the rate of 5% for 8 lakh. Supplier Maharashtra, place of supply Gujarat. So I will take IGST credit of the machine. So here, interstate purchase of machine on 8 lakh, 5% IGST credit I will avail. Okay. After that, he has obtained professional services from a senior advocate of Gujarat to represent him in the matter before tribunal. Now tell me, if you are taking services of advocate and your preceding financial year turnover, they've already said we crossed the registration limit in preceding year only. We crossed registration limit in preceding year, which means now RCM will be applicable on any advocate services that you are taking. So 1,50,000, the advocate is also from Gujarat. You are also in Gujarat, which means C plus S GST RCM you will pay and C plus S GST ITC you will also get at 1,50,000 into 18%. So here advocate RCM 1,50,000 into 18% C plus SGST, and also I will get credit of the same. After that, he was allotted an office on rent by state government of Gujarat close to seashore at Aliabit oil field. Now again tell me, renting of immovable property by government to a registered person, consideration greater than 5,000, will it attract reverse charge mechanism? Yes ma'am. So simple, very simple, renting of immovable property by government to registered person, amount greater than 5,000. This is going to be taxable under reverse charge mechanism. I will also get ITC of the same. Supplier, place of supply, everything in Gujarat, which means 2,50,000 into C plus SGST 18%. Got it. So I will pay RCM. Here I will pay RCM. Also I will take credit of the same. Got it. After that, he got a portion of the petroleum slit which is not taxable under GST as a part of compensation while exploring the petroleum reserves at oil field, which as per the contract with government is a part of cost petroleum. We know cost petroleum is not taxable. We've already studied this provision in supply under GST clarification part, that cost petroleum in GST is not taxable. Also the share of government in profit petroleum is also exempt under GST. So here cost petroleum simply we know is not going to be taxable under GST. Then he sells the petroleum slit, non-taxable. Again they are saying that whatever petroleum slit we are selling here is again exempt only under GST to SEZ developer in Bhavnagar, Gujarat, and we have filed LUT under GST. Now tell me, if we export any exempt product or if we supply any exempt product to SEZ unit developer, it becomes a zero rated supply. Do you all agree with me? Say yes or no. See, normally let us say this calculator is exempt under GST, arbitrary example. If I give this calculator to, let us say, Pradeep, I sell this calculator to Pradeep. Now no GST will apply because this is exempt under GST, and also whatever I have purchased with respect to this calculator, ITC will be blocked for the same. But if I decide to export this same calculator or supply this same calculator to SEZ unit or developer, it becomes a zero rated supply. Now I can also take credit of the all inputs pertaining to this particular exempt supply which now is exported or supplied to SEZ. So now this becomes zero rated. Question itself says that it is all without payment of GST under bond or LUT, which means no need to pay anything. But yes, this becomes a zero rated supply. So whatever I have supplied to SEZ becomes a zero rated supply. But most important, no reversal will be required. Therefore, we are happy. No need to apply rule 42-43, no reversal, because it is pure taxable only, taxable with a tax rate of 0% because it is zero rated supply. Then we say consideration received in the nature of recovery of a bond amount in case of 3 employees leaving employment before a minimum period of 1 year. Liquidated damages, this is tolerating an act or refraining to do an act or to do an act, whatever compensation is taken. If it is only to make good the losses or injury, then it is a liquidated damage. This is a classic example of liquidated damage already given in the notes, as it is only that if any employee is leaving the company and you forfeit the salary, recover the bond amount, it is only to discourage the non-serious employees. No supply is intention here. Therefore, no GST will be applicable because this is a liquidated damage. It is not exempt, it is not supply only. See, understand, Being a supply and then being exempt is a different thing. This is not a supply only under GST. So again, no problem. No GST will apply. Then consideration received towards transfer of tenancy rights in Gujarat, which is not liable according to Vasudev. A. We know tenancy rights are always taxable. If according to Vasudev, they may not be taxable because he is saying that I have also suffered stamp duty. We know irrespective of the same, tenancy rights GST will apply. This is also in Gujarat. We are also in Gujarat. Therefore, on this 7 lakh, C plus S GST is going to apply. Yes, we have received consideration, which means it is our outward supply. It is our outward supply. So on 7 lakh, C plus SGST, outward payable will arise. After that, consideration received from mining leaseholders for renting of 5 dumpers, including driver, given for transport of minerals within the mining area for a period of 2 years. Now tell me, renting of dumpers. C plus S GST. I have received consideration because I have given dumpers on rent. Very simple. Dumpers are given here only for mining area, which is in Gujarat. We are also in Gujarat. So C plus S GST 99%. This is going to be taxable. Very simple. Then they are saying that we have been assigned the mining right from the government, and 3 lakh is not the value of supply. 3 lakh is the IGST amount only. We know if any miner is taking any mining right from the government, then on the license fees being paid, whatever GST is applicable, that you have to pay under reverse charge mechanism, you can also take ITC of the same. We have also studied this point in ERCC exemption chapter, that whenever miner takes licenses, miner is required to pay RCM on the license fees. So they have directly given us the 3 lakh amount, which is GST amount only. So no need to apply the 18% rate here again, because this itself is the GST figure. So 3 lakh I will pay under reverse charge 3 lakh I will pay under reverse charge mechanism, and 3 lakh I can also avail as my input tax credit. Say yes or no everyone. No reversals required because nothing is exempt here. Either something is supply or not supply, matter is over. So whatever I have supplied is basically all taxable and zero rated only. Therefore no reversal will be required. Simply I know my outward liability, I know my ITC, and I know my opening balances of ITC plus current month ITC. Total ITC I will set off in the manner IGST first against IGST, then C and S, then C against C, then I, and S against S and I. C and S cannot be used against each other. And then whatever is payable under reverse charge mechanism, I will simply add it. So this becomes as my total liability paid via cash. And then I told you that what is the opening balance of cash ledger. We have SGST cash ledger opening balance 34,000, which means this I will reduce here from the amount payable via cash, because cash balance is there available with me. This is the new cash that I need to deposit via challan and pay it to government. Say yes or no everyone. Understood the entire question. There is nothing much tough in the question. It is simple only. No reversals, etc. Simply outward, inward, RCM. Question is over. Chalo. Shall we start with the next question, number 47? Hey everyone with me, drop me a hi in the comment section that yes ma'am we are alive. जिंदा हैं हम और जोश हमारा हाई है. बोलो ना. Done, chalo. Question 47. Skylark Private Limited, Noida, Uttar Pradesh, is engaged in various kinds of commercial activities, manufactures taxable goods, also provides certain services. Branch office New Delhi, head office Noida, branch office Delhi, registered under GST. Branch office is eligible for full ITC. See, the branch of it at Delhi is eligible for full ITC. This gives us an hint that if in any situation Noida office has supplied something to the Delhi office, we know that they are distinct person, rule 28 of valuation will apply, and whenever recipient is eligible for full ITC, whatever we declare in the invoice is taken as the value of supply according to rule 28. So this is giving us an hint that there would be something with respect to rule 28. And since the recipient is eligible for full ITC, forget open market value, forget everything. Whatever we declare in the invoice becomes the value of supply. Company has reported a total turnover of 256 crore exclusive of GST for the month of August, and this information is relating to the turnover. So they are saying that our total turnover is 256 crore, which is composed of all these items. So let us see what the items are. First of all, we are in the state of Uttar Pradesh, Noida. Supplier is from Uttar Pradesh, Noida. Okay. Now compute the GST liability, okay, Skylar, for the month of August. So this is important. Only if the GST payment is arising in August, then only we are going to consider it. Suitable assumptions we have to take. Goods, the rate is 12% and services, the rate is 18%. Got it. RTP May 20. Now we say the turnover includes 45 crore from sale of securities which were purchased for 30 crore in the month of January last year. We know securities are neither goods nor services. Securities are neither goods nor services. Therefore, no GST will be applicable on sale of securities. Matter over. Company supplied goods worth 50 crore to ABC in UK under a letter of undertaking. The total export proceeds were received in the month of August itself, 30 crore in foreign currency and balance 20 crore in Indian rupees. Now see, for goods, the condition of export is very simple, that the moment goods cross territorial waters of India, we say export has happened. We say export has happened and we give you zero rated benefits. Later on, if the amount is not recovered within the time limit given by RBI according to FEMA, then refund is taken back from you. That is all a separate story. Today I know if I have exported my goods have crossed territorial waters of India. Whether payment is received in forex convertible currency, whether payment is received in INR, it is all irrelevant. For goods, territorial waters of India cross, export happened. This is a zero rated supply, yes. So entire 50 crore being a zero rated supply, no payment because it is under a letter of undertaking. Okay, so export of goods, nil GST will come because it is without payment of GST export undertaking. Then sale of security, neither goods nor services. Again, no GST will be applicable on the same. Got it. Next point, the company provided consulting services to Sherpa in Nepal for 30 crore. Entire consideration is received in INR in the month of August with the permission of RBI. If RBI has permitted us to receive INR, it is okay. For services, payment should be received as a consideration. Is a condition only, then you consider it as zero rated. See, when it is called export of service, we say if supplier is in India, recipient outside India, place of supply outside India, not mere establishment of distinct person, and consideration is received in forex convertible currency. But at some places like Nepal, etc., government has already allowed us to receive INR, it is not a problem. So we have received consideration for a service being exported. This will be allowed. So here we say this is again a zero rated supply under bond LUT. So no GST required to be paid. Where is it? Export of goods, then where is export of service? Yes, here. Export of service to Nepal, again no GST because it is a zero rated supply. Got it. After that, the turnover includes supply of goods worth 10 crore from Shanghai Jianguo Trading Company Limited, a company based in China. As per the sale contract, goods were to be assembled at Shanghai company's office in Gurugram, Haryana. The payment of the goods is received in convertible foreign exchange in the month of August itself. Now see what we are saying. We have supplied the goods. To a person in China. So supplier is in India, recipient is in China. So for place of supply, section number 13 will come. Now section 13 says that whenever there is any performance based service involved, the place where the performance is performed becomes the place of supply. And we have assembled the goods in Gurugram, Haryana only. So the place of supply now becomes Gurugram, Haryana according to section 13. And supplier is in Uttar Pradesh, Noida. Supplier Uttar Pradesh, place of supply Gurugram, Haryana, which means IGST at the rate of 12% on this 10 crore will be applicable. So here we will say 10 crore into IGST 1.2 crore. 12%, 18%, sorry, this is goods, right? This is goods. So 12% will be applicable because it is machine. 1 second. The goods were to be assembled in the Gurugram office, Haryana. The payment of goods is received. Okay. Section 13 was for services. I'm sorry. Section 13 was for services. Okay. But even though section 13 is for services, that if assembly services we are talking about then. But for goods also we know that wherever the goods are assembled, installed, that only becomes the place of supply. So here we will say that the place of supply is going to be Haryana only. And for goods we will say 12% rate will be applicable. We are not talking about assembly service for the goods. We are talking about about the goods itself. For the goods itself also we know that wherever the goods are assembled, that only becomes the place of supply. So the place of supply is going to be Gurugram, Haryana, and therefore IGST will be applicable here. Where is it? No, just a second. The goods are not exported only because the goods are being assembled in India. Therefore, Gurugram, Haryana only becomes the place of supply here. Next, goods worth 20 crore are supplied under a LUT to DEF. I am very sorry, section 13 will not apply here because we are not talking about services. We are talking about goods only. If this would have been services, then section 13 would have applied. This is the general provision, section 12. Because goods are not going out of India, they are assembled in Haryana only, and therefore Haryana only becomes the place of supply. Simple. Then goods worth 20 crore are supplied under LUT to DEF Private Limited located in SEZ in the state of Uttar Pradesh. Supplied to SEZ even though same state, always considered as IGST only, interstate supply only. So we know that IGST is applicable whenever you supply any goods to SEZ unit even though it is in same state. We are in Uttar Pradesh, SEZ also in Uttar Pradesh, still IGST applies. But now no need to even see that whether IGST applies or not because it is anyways without payment of tax export. If it would have been with payment of tax related supply, then also we would have paid IGST only. This is under LUT. So anyways CSI doesn't matter because no GST will apply being a zero rated supply. Still I am explaining you this extra point that even if it would have been with payment of tax, then also we would have taken IGST only. So here I will say that whatever I have supplied to SEZ being a zero rated supply, no GST will be applicable. After that, goods worth 40 lakh were being procured from a vendor in Japan. Goods were in transit. We secured an order from Thailand and without entering into India, the goods straight away went from Japan to Thailand. One non-taxable territory to another non-taxable territory without goods entering into India is a negative list schedule 3. Therefore, it will not be a supply. Goods from Japan to Thailand without entering into India, one entity to another entity without goods coming into India, not a supply schedule 3, therefore no GST will apply. So we will say that from Japan to Thailand no GST is going to come, it is neither goods nor services falling under schedule 3. After that, we are saying that the remaining turnover comprised of taxable goods within the state and outside the state in the ratio 3:2. Now, this you can simply calculate. See, the total turnover is 256 crore. The total turnover is 256 crore minus whatever they have given. You simply reduce. Whatever final balance amount will come, apportion it in the ratio of 3:2. For 3:2 ratio, 3 you will take for goods 12% and 2 you will take for service 18%. So we will say sale within the state, sale outside the state, will simply take it in the ratio of 3:2 for the balance amount out of 256 after reducing all this that they have given to us. After that, total turnover of 256 crore includes 0.127. We know 0.127 we have all considered. In addition to above means these things are not in 256. They are over and above 256. Okay. So 256 total we had. 256 total we had. Okay, sorry, I forgot the 7th point. Sorry, we missed on the 7th point. The company owns 3 immovable properties in Noida. The first building is let out for running a printing press, 10 lakh per month. Second building is let out for residential purpose, unregistered person, 5 lakh. And third building for a cold storage. Now we know renting of any property, if it is commercial purpose, always FCM. If it is residential purpose to unregistered person, it is exempt. But residential relating to business purpose to registered person, it is reverse charge mechanism. Now in this question, first building is given to a printing press, which means commercial purpose, so on 10 lakh GST will come. But second building, residential purpose, unregistered person, residential purpose, unregistered person, it is going to be exempt under GST. And the third building, cold storage, again commercial purpose, so we will take 5 lakh here. So 10, this 10 and the second 5 becomes taxable at the rate of 18%, being renting of immovable property. So here we will say renting of building 0.15. Why? Only 10 plus 5. This will become taxable C plus SGST. Got it. And then out of 256, you reduce all these figures that are given. Whatever you are left with, a portion in the ratio 3 is to 2. A portion in the ratio 3 is to 2 for goods within the state and outside the state. So it is not services, it is within state and outside state only. So within state, C plus SGST will come, and outside state, IGST will come. Everything is goods only, not services. So 12% rate will only apply. 12% rate will only apply. Only 6 plus 6% here and entire 12% here, because it is all pertaining to goods, whatever is left out of 256. After that, the company transferred its stock from Noida to Delhi branch without consideration. While starting the question only, I told you, see, recipient is eligible for full ITC. So you forget everything. According to rule 28, whatever you declare in the invoice will be accepted as your value of supply. So we are declaring 4.5 crore in the invoice. This is over and above 256 crore. So 4.5 lakh will now become my value of supply, full ITC eligible. So 4.5 lakh, IGST will apply, 0.54 payable outward. Got it. Forget cost, forget everything. Whatever you show in invoice becomes value of supply, because recipient under rule 28 eligible for full ITC. Company had sent goods worth 12 crore to Messrs Sharma Traders in Haryana Icon. Approval on 5th Jan, 15th Feb and 15th March. 4 crore each month. So Jan, Feb, March, 3 months, 4 crore, 4 crore, 4 crore. We keep sending the goods for approval basis. Now goods sent during all these 3 months are approved in September month. The opposite person approved all the goods in September month. Now we know, in case of goods sent for sale approval basis, the time of supply is the actual time of supply or the 6 months from removal, whichever is earlier. So if I send the goods on 15 Jan, Feb, March, April, May, June, July, we are calculating liability for August. So on this 15 Jan when goods were sold, liability would have already arose in the month of July only. Therefore not relevant. For February, I will say March, April, May, June, July, August. 15 August, 6 months expire. Therefore on this 4 crore for February month, 4 crore for February month, I will say that yes, this will be a supply. This will now be considered as a deemed supply and GST will apply. And for what I have sent in March, my liability will come in next month September, because in September my 6 months are going to expire. Therefore, it is always important to make sure that you are very clear with which month liability you are calculating. Because I am calculating liability for August month, I will only take liability of 4 crore for February month, whose 6 months are expiring in August for sale or approval basis. So I will take 4 into IGST 12% for these goods. Done, everything solved. This is not goods services, this is services, and these are all the goods that we have taken. Say yes or no, everyone. Clear? One second. Someone is asking a doubt with respect to the Skylark question. See, I have to solve full comprehensive questions with you, 20. So of course, solving these many questions, these many adjustments, I might make a mistake in speaking. So you guys be active. Not taken in Skylark. One second. Skylark is question number which? You tell question number. Don't say the name. How am I going to search? See, I have to speak so much. It is not a revision, it is a question. So many figures involved and I have to cover maximum things in less time. So yes, possible, I might make a mistake in speaking. Therefore, beforehand only I have solved all the questions and come with you to save your time. So you guys be active and let me know if I am making any mistake in writing any amount or anything like that. When you have a lot of time, you sit with the questions. In that case, you don't make mistakes. Why are we not taking 1%? Because we are not calculating any reversals. No, we are not calculating any reversals. While calculating reversal for E by F, you take 1% of the security amount being sold. Here, we are computing the GST liability. There is no common credit also. If there is any common credit, then you need to calculate E by F and make reversals. There is no common credit in this question, no reversal required. Then why should I take 1% of sale of securities in my E and F calculation? Because we don't have to take it only, no calculation is required, no reversal is required. You do not have to pay GST on 1% of the sale value of the security. GST never paid on any sale of security. Only 1% of sale of security you have to take while computing E and F for the purpose of reversal of common credit. And there is no reversal of common credit in this question. Therefore, this becomes completely irrelevant for us. Bolo Dars, is it clear to you? Yes, ma'am. Chalo. Moving on to next question, question number 46. See, here you will understand the entire computation of E and F. Question number 46 includes the entire computation of E and F for the reversal purpose. Chalo. Janki Nandan Associates, a proprietorship firm in Lucknow, registered under GST, manufactures three products: Zeta, Sigma and Omega. Following information has been provided by Janki Nandan Associates for a particular tax period. Omega and Zeta are sold in the domestic market as well as exported out of India. Domestic, okay, first of all, we'll read the required part first. Okay. You are required to compute GST liability payable from electronic credit ledger or cash ledger as may be for the given period, for the given tax period. Now, what is the given tax period? The given tax period, again they have said particular tax period here. So, they have not given the name of month only. They have not given the name of month. They are saying particular period, that period, which period, okay. So, which means whatever amounts are given, we will take all considering they are all for same month only, of course. Then all the above transactions are exclusive GST wherever applicable. Assume rate of inward outward goods 12%, service 18%. Okay. So all goods 12%, service 18%. You ignore the bifurcation. See, the question now becomes very simple. Everything you have to take it as total GST only. Forget CGST, SGST, IGST bifurcation. So one thing is very sorted in my mind, that I am now least concerned with the place of supply, because no need to ascertain whether it is intrastate supply or interstate supply. Everything I have to take as total GST only. Preceding financial year turnover was 72 lakh, which is greater than registration limit, which means if there is any legal service, arbitral tribunal service, I will apply RCM. Unless otherwise mentioned, exports made under LUT, which means exports are without payment of tax unless otherwise mentioned. Reading this paragraph made a lot of things very simple for me. Imagine not reading this line, determining place of supply for every transaction, then doing CSI bifurcation, and then at the end you get to know that this bifurcation was not required only. So always I keep telling you that read the required part first, so your mind is clear with what you are looking for. Chalo. Now let us move. So we know there are a lot of products, which means some are taxable, some are exempt, some are sold on a reverse charge. So there will be reversals, of course. There will be reversals because we do both kinds of supplies and there are common credits. So along with reading of questions, we will start calculating E and F simultaneously only. So Omega and Zeta sold in domestic market as well as exported outside India. Now export is zero rated, but it is not exempt, we know, which means on export, even though GST is not coming, it will not form part of E because it is zero rated. It will only form part of my total turnover. Domestic turnover including export of Zeta and Omega are 21 and 15. So 21 and 15 taken in my total turnover, not exempt, of course. Export turnover of Zeta with payment of IGST. See, normally we are saying that all the exports are without payment of GST only. If mentioned particularly, then it is with payment of GST. Here they have mentioned particularly that this export is with payment of GST for 3.75 crore. Again, it is zero rated only. Once you pay, then you get your refund. So it will form part of my total turnover, not exempt. And Omega worth 15 lakh is exported. Got it. Now see, first of all, 21 lakh and 15 lakh respectively are these are the domestic turnover. These are the domestic turnover excluding export sales. So on 21 lakh and on 15 lakh, GST will be charged. So on 21 lakh and on 15 lakh, GST is charged. Got it? But they are saying that with payment of IGST, 3.75 lakh is exported. With payment of IGST, 3.75 lakh is exported. So once I will have to calculate GST liability, a lot of students ask me doubt with respect to same, that ma'am, if it is export, why are you taking GST? If it is export, why are you taking GST? Because the question is very clearly saying it is export with payment of GST. We know there are two types of exports. In without payment, you furnish a bond LUT and you do not need to pay any tax only. But in case of with payment of GST, you first pay, then you get the refund, and ultimately it becomes zero rated at the end. So because this is with payment, today when I am exporting, I will first have to make a payment. Got it? And then we are saying that the tax on Sigma payable under reverse charge mechanism, it is sold domestically only. Domestic turnover is 9 lakh. Now see, if I am domestically selling something which is taxable under reverse charge mechanism, tell me, will it form part of E, yes or no? First of all, because it is sold 9 lakh RCM, so my recipient will pay tax under RCM. It will not come in my liability. It will not come in my liability because recipient will simply pay tax under reverse charge mechanism. That is very clear and simple to us. Omega again 15 lakh is exported. If Omega 15 lakh is exported, now if nothing mentioned, I will assume it is without payment of tax. So again 50 lakh Omega exported, no GST because zero rated supply without payment of tax, forms part of my turnover. Got it. This sigma that I have supplied domestically in India where reverse charge mechanism applies, I know it is a part of my total turnover, of course, but also we know anything that is exempt, nil rated, not taxable, plus on what the recipient is required to pay tax under reverse charge mechanism also forms part of my exempt turnover. So this 9 lakh supply on which my recipient will pay tax under RCM will form part of my exempt turnover and also my total turnover. See, if I purchase something on which I pay RCM, then it is not my turnover. Here I am supplying something on which recipient is paying tax under RCM. It is my turnover, total turnover, of course, plus it will also be a part of my exempt turnover because no ITC with respect to same is allowed under GST. Then we are also engaged in providing taxable consultancy services of 30 lakh provided to unrelated clients and consideration is also received. So this is again export of service, zero rated. So zero rated will come in my total turnover, and export of service, no need to pay any GST because zero rated without payment of tax as they've already mentioned in question. Firm sold the shares held by it for 375 lakh, earlier purchased at 360 lakh. Purchase price irrelevant. On this 375 lakh, no GST will be paid, we know, because securities are neither goods nor services. So on this 375, no GST. But 1% of 375 for my E and F calculation, I will have to take in exempt turnover also, and I will have to take in my total turnover also. Sale of land building at stamp duty value, then 1% of sale of securities. These things GST you never pay, but while computing E and F for your reversal purpose, you will always take the same. So I will take 375 into 1%, which is the sale price, into 1% for computation of E and F. Due to shortage of funds, we sold one of our factories for 180 lakh, but the stamp duty was 3.5 lakh being 2% of the value. So if 3.5 lakh is 2% of the stamp duty value, what will be 100% stamp duty value? 3.5 upon 2%. Again, this will be included in E also. This will be included in F also. No GST on the same. No GST on sale of land and building because it is Schedule 3 negative list. But I know I will have to take it in computation of E as well as F. At stamp duty value, 180 lakh is irrelevant. 180 lakh is irrelevant. I will do 3.5 divided by 2%, which comes as 175. 175 will be taken as my stamp duty value for E and F computation. We earned interest of 6 lakh on FD. Now we know interest is normally exempt, but for computing E transaction, for computing the exempt turnover for reversal purpose, interest if earned any person other than bank, it does not form part of E. Even though interest is normally exempt, but while calculating your E exempt turnover, you do not consider interest. So this 6 lakh will only form part of my total turnover, but not of my exempt turnover because no reversal required. Only bank and financial institutions are required to do reversal for interest income, not you, me and normal people registered under GST. Okay, details of the input services they are saying. So we received legal services from advocate in relation to product Zeta only for one product Zeta which is taxable. See, Zeta is fully taxable, therefore full ITC will be allowed for the same. I will pay RCM and no apportionment, no common credit for this ITC. Full ITC will be allowed on 5.25 lakh multiplied by 18%. Got it. Remaining input services are availed for inputs for 52.5 lakh, input services for 24.5 lakh. So what I will simply do, apply 12% on inputs, apply 18% of input services, and I will calculate the ITC. This ITC now will be the common ITC used for everything. This will be the common ITC used for everything. And then I can do common ITC multiply by E by F, which we have already calculated, and you get your reversal figure. After reversing the eligible ITC you can use to set off your outward payable. So see, here I will say again sale of land building, no GST will apply. Interest received, again it is exempt under GST, therefore no GST. This is my total amount payable. This is my total amount payable. Then I simply calculate. Input into 12%, input service into 18%. This is my total common credit. Yes. And exempt turnover we calculated, total turnover we calculated. So this will be the reversal. After reversing this from the total common credit, this will be eligible, and plus whatever I have paid under RCM. Legal service, whatever I have paid under RCM for Zeta, full ITC will be available because it is not common, it is particularly pertaining to taxable supplies only. So we will say common credit plus legal minus, we will do this into E by F amount. This will be my eligible ITC. So outward payable minus ITC, this is what I have to pay from cash ledger, and plus on legal services RCM I have to pay. RCM always have to be paid via cash only. This is the total figure that I need to pay via my cash ledger. Got it everyone? Say yes or no. Understood? This question was simple. This question was a pure question of rule 42, rule 43, where you have to compute E, you have to compute F, and you have to do common credit reversal. One credit is exclusively relating to taxable, so no reversal for that. Other than that, all common credits you will take a total, multiply with E by F, and you will find the reversal amount. You will reduce that amount, and then you will arrive at your eligible ITC. Chalo. Got it everyone? Yes or no? Moving on to next question number 45. Ram Company Limited, a registered supplier of Prayagraj, Uttarakhand, is a manufacturer of goods. The company provides the following information pertaining to GST on inward supplies during the month of April. What is the question asking? Compute the amount of net ITC available for the month of April. Okay, this is not a computation question. This is not a computation question. We are simply saying, not a computation question, we are simply saying that compute the ITC that will be available with us. So relatively a simple question. No RCM, no computation, no set off, only you have to say whether ITC will be allowed, not allowed, allowed, then how much allowed. Total ITC is what you are required to calculate. Chalo. Life insurance premium paid by company for the life insurance cover of factory employees as per the policy of the company. No legal obligation. Tell me, beauty treatment, services, if then catering, restaurant, all these services. If there is no legal obligation, still you decide to do it, ITC is going to be blocked under section 17(5). So I will simply say that on this 1,50,000, my ITC is going to be blocked according to section 17(5). If this would have been mandatory according to the stat obligation, then I would have taken ITC for the same. In the month of September of preceding financial year, Ram Company Limited availed ITC of 2,40,000 on purchase of raw material, which were directly sent to job workers' premise under a challan on 25th September preceding financial year. The said raw material has not been received back from job worker up to 30 April. We have studied section 19C GST Act along with special procedures of section 143. What is the stipulated time limit available with job worker to return the goods to principal? Tell me. Ma'am, for inputs we know it is 1 year plus extension of 2 years possible. For capital goods it is 3 years, plus 1 year. 1 plus 1 year, and for capital goods extension of 3 plus 2 years is possible. These are not capital goods in this question, it is pure input and they are not talking about extension. So simply 1 year will be the applicable time limit. The day on which I send my goods to job worker, I can take ITC of those goods, send the goods to job worker without payment of tax. The condition is very simple, that the job worker should return these goods within 1 year to me. Now we sent the goods. We sent the goods on 25th September. We are standing in April today, which means September, October, November, December, Jan, Feb, March, April. 1 year has not expired yet. So this point is simply given to confuse you. This will have no implication on the answer. No implication on the answer, because the day on which 1 year expires, after that my ITC becomes ineligible. After that I have to consider this as a supply. But today, when 1 year has not expired, everything is okay only. Job worker still has some more 3-4 months left with him till 25 September of the next year to send the goods to me. Therefore, no adjustment only will come for this particular point. Say yes or no, everyone. No adjustment will only come for this particular point, because the time limit to send the goods back is still pending. You had taken ITC that time, which was okay, no need to reverse anything. Raw material purchased which are used for exempted goods supplied as zero rated supply. Now tell me, we discussed this in some previous question also, that if exempted goods are exported, they become zero rated, then ITC is allowed to you. If this calculator, let us say example of milk. Milk is normally exempt in India, therefore any inputs that you take with respect to milk, ITC will not be allowed. If you start exporting that same milk, then any purchase that you make relating to input, relating to that milk, ITC will be allowed to you. So this exempt because now it becomes zero rated. Therefore, ITC will be allowed to us for this 50,000. Job worker, no need to do any adjustment for now because time limit of 1 year has not yet expired. Then we say works contractor's service used for repair of factory building, which is debited in the P&L. Now, works contractor and construction, normally ITC is blocked under section 17.5, but last line of chapter 17.5 in the hand of the section 17.5 in the handwritten notes is written this only, that if any renovation or works contractor construction service that you are not capitalizing in the books, but you are writing it off in your P&L account, then ITC is eligible. Because we are writing it off in P&L, this is a repair, not a pure construction or works contract, and therefore ITC of this 30,000 will be allowed to us. ITC of this 30,000 will be allowed to us because we are not capitalizing. In this same point, if this works contract would have been capitalized, then ITC would have been blocked. Okay, after that, company purchased the capital goods for 4 lakh and claimed depreciation of 44,800 at the rate of 10% on the entire. So see, the machine was for 4 lakh. Machine was for 4 lakh, GST amount 48,000. You took depreciation on entire 4 lakh 48,000. This is 4 lakh. This is 4 lakh 48,000. So you took depreciation on entire 4 lakh 45,000 including the GST component. Now tell me, according to section 16.3, according to section 16.3 CGST Act ITC chapter, we know that on the GST component that you have that is pertaining to any capital goods that you have purchased, either you can take depreciation on the GST component or you can take full credit of the GST component. Both is not allowed because I have already taken depreciation. Therefore, section 16.3 now blocks my credit for the same thing. So 48,000, no credit will be allowed. Got it, ma'am. After that, raw materials purchased from Neha Traders. Invoice of Neha Traders is received in the month of April, but goods were received in the month of June. This we can call as a pure drafting issue with ICAI. Normally, any normal person would assume that if invoice is received in April and goods in June, which means goods must have been received in the next June coming after April, and we know that we can take ITC only when the goods are received. Because goods are not received in April, we will not take ITC. But what they are assuming here, you know, we are standing in April. Their assumption, listen, we are standing in April today only, when we received the invoice in this month only, and they are saying the goods were received in June, which means June is yet to come. How do we know whether goods will be received in a future June? So they are assuming here, and this is just assumption in this particular question only. Do not get confused. Your understanding is clear. This is their drafting mistake or issue or their own assumption, we can say. So they are saying we are in April today. We cannot say anything about future. But we know that the goods were already received in June, which means we are, let us say, if in April 2023, they are saying that the goods were received in June 22 only. So goods already received earlier, invoice received now. Therefore, we can take ITC of the same. Do you understand why have they taken ITC? Because they are assuming that ITC is available, assuming it is their assumption. I am again repeating that invoice is received in the month of April in current financial year, but goods were. They are focusing too much on grammar, that goods were already received in the previous year, June. Therefore, we can take ITC of the same. If in examination you assume alternative thing, assuming that June is yet to come and goods are yet to be received, and you don't take ITC, that is also correct on our point, because it is just a pure language. We are not messing up with the provision. We know the provision that invoice and goods both should be received, then only we will take ITC. This provision we know. Now they are simply playing with our feelings by using such grammar. Okay. Then we say car purchased for making further supply of such car. Such car is destroyed in accident. See, normally motor vehicle purchased ITC is blocked. But if you are taking it for further supply, then ITC is allowed. But again, if the car is destroyed, then section 17(5) says that any goods lost, destroyed, stolen, written off, given as free gift or sample, ITC is blocked. Therefore, this 30,000, no ITC will be allowed. It is going to be blocked. And setting up telecommunication tower, see, we know telecommunication tower, entire building, land, civil structure, or pipeline outside the factory. These three things particularly, construction and works contract is blocked only under section 17(5), a very particular point only that we have studied. So telecommunication tower setting up, ITC is going to be blocked according to section 17(5). This was a very simple question. This is not a computation question. You are only required to calculate the total ITC that will be available. No RCM, no outward payable. Simple B category question you can call it. Say, is it clear? Yes or no, everyone? Chalo. Is it clear to everyone? Say yes or no. Shall we proceed further? Moving on to next question number 44. The details of transactions of J Limited, Vadodara, Gujarat, a registered taxable person during the month of February 2024 are as under. Okay, what are they asking? First of all, registration is in Gujarat, the period is Feb 24, and they are asking us, assuming CGST, SGST rate 9%, IGST 18%, except for merchant exporter. Merchant exporter, we know that for merchant export, rate of GST applicable is 0.1%. Ignore compensation says we had opening balance of ITC, CGST, SGST in respect of all inward outward supplies, everything is uploaded. So you have to assume everything is okay, and you have to calculate the liability for the month of February 2024. Supplier in Gujarat and liability to be calculated for the month of February 2024. Chalo. So purchased goods from a manufacturer in Maharashtra as a merchant exporter. See, we have purchased from a merchant exporter and the value is 7 lakh rupees. Now tell me, the rate of GST applicable for merchant export is 0.1%. So 7 lakh into 0.1%. See, this was the opening ITC 20,000 given in the question, plus 7 lakh into 0.1%, 700 ITC I can take for merchant export purchases. Then imported goods from China, CIF value 5 lakh. Goods were sold for 5 lakh 10 as high C sale. Now see, first of all, goods imported from China, they never reached India only because we sold them when they were in high C. They never reached India, therefore no GST payable on purchases, no ITC, no RCM, matter over. Now talking about sale, two things are involved in this one point. One, we are purchasing goods from China. Second, we are selling it to some party in high C only. So for purchase, see, import is considered only when goods cross territorial waters of India. These goods were in high C when I sold them. They never crossed territorial water of India. Therefore, no import happened, no RCM, no IGST will apply. And on the sales, because I have made a high C sale, then according to Schedule 3, FB changes. According to Schedule 3, FB changes, we know H means high C sale. High C sale, no GST applicable, Schedule 3. So, no ITC, no RCM, no GST, no implication of this point on entire answer. Then we purchased goods from a third party in Taiwan, sold the goods to a party in Turkey without bringing them into India. Now again, purchase for 5 lakh, sale for 7 lakh. Purchase also not taxable, sale also not taxable because the goods never came into India. We purchased from Taiwan. If they would have come to India, then import would have happened. Import did not happen. Also, we have sold the goods directly to a person in Turkey without goods entering into India. So N here means one non-taxable territory to another non-taxable territory without goods entering into India. No ITC, not import, no supply, Schedule 3 again. No implication on answer for this particular point. J Limited paid sales commission of 50,000 to Mrs. T, their agent, in connection with this transaction. Transaction was completed in the third week of February. The figures in rupees have been given after conversion. Now see, we have paid we have paid a sales commission to a person outside India. Now understand, if supplier or recipient, one person is outside India. If supplier or recipient, one person is outside India, in that case we apply section 13. Section 13(8) says that the place of supply is the location of supplier only. The place of supply is the location of supplier only. Supplier is outside India and therefore place of supply is also outside India. So here we will say section 13(8) says that intermediary we have used to purchase the goods. Intermediary outside India. Place of supply outside India. Supplier also outside India. In this situation, you cannot charge GST only. Place of supply outside India, supplier has to be in India, then it is considered as export. No, supplier also outside India, place of supply also outside India. This is not a supply in India, therefore no GST can be charged because this is not happening in taxable territory. So for this entire provision, this entire point number 3, I will say no implication on answer will come. Goods imported from China, nothing. Goods purchased from Taiwan, nothing. Sales commission paid. Sales commission paid, again Mrs. T is outside India and place of supply also outside India, therefore no GST will come, no ITC etc. will come. Got it. Goods exported, export of goods to Spain under LUT. See, for merchant export that I am purchasing, I took 0.1% ITC. When I am selling under LUT, again it's a zero rated supply, therefore no GST payable. High C sale, no GST payable. See, I told you two things are involved, purchase, sale, purchase, sale. So first they are saying that for purchase, no ITC. Also for high C sale, no payable. Also for high C sale from, also for sale from one non-taxable territory to another non-taxable territory, no GST will come. So we've solved all of these points. Then we move on to next, saying that J Limited agreed to provide technical consultancies, technical services to Mr. K of Ahmedabad, who is an unregistered person in connection to manufacturing operations. Total consideration agreed is 5 lakh, but we have received advance of 1 lakh. Now tell me, for services, advances are taxable. So in the current month, in the February month, we received 1 lakh advance, which means 1 lakh into 18% taxable. For goods it is not, but for services it is. We are in Gujarat. Service is also provided in Ahmedabad, Gujarat, which means 1 lakh. From this entire 6 lakh, only on, payable we are checking. Yes, payable. So on this payable of 1 lakh, I will say 9%, CGST and SGST for the consultancy services fees that I have received. After that, imported raw material from China. CIF value of the goods for the purpose of customs included 1 lakh as ocean freight and the total amount worked out was 6 lakh. See, first of all, we assume that the 6 lakh value includes custom duty also, because GST is applicable on assessable value plus custom duty plus social welfare surcharge. On the entire figure, we know that we normally apply GST, pay it to government and then take the credit of the same. They have not given any information about custom duty, social welfare surcharge, therefore we will have to assume that 6 lakh includes everything. So on this 6 lakh, I will pay GST, RCM and I will also avail the ITC. So on this 6 lakh, for whatever I am importing from China, I will pay 18% and I will also get ITC of the same. So see, here I am paying under reverse charge mechanism and I am also claiming ITC for these things that I have imported. On 1 lakh, again no GST will come. We know the case law of Mohit Minerals. Mohit Minerals case law simply says that whenever you are paying any freight amount, foreign shipping company, because this assessable value already includes this freight amount and GST is already paid on the same, no requirement to pay RCM again on the freight amount separately. Earlier there was an RCM entry section 5.3 which was then later removed on, because assessable value already includes the freight amount and we pay GST on the entire amount. No need to pay GST again on this 1 lakh freight according to Mohit Minerals case law. Understood. Then we say locally purchased taxable raw materials stored in the factory got spoiled due to rainwater and became unusable. Now tell me, goods lost, destroyed, stolen, written off, given as free gift sample, we know ITC is going to be blocked. Even if you receive any insurance compensation for the same, whatever it is, ITC is going to be blocked because goods are lost, destroyed, stolen and written off. So section 17(5) according to, we will say that for raw materials spoiled, ITC will be blocked. Then we say company purchased a 3-wheeler having seating capacity of 2 person including driver, engine capacity 20 cc. Tell me, for 2-wheeler and 3-wheeler up to 25 cc, ITC is allowed. This is only 20 cc, which means ITC on this 2.5 lakh is going to be allowed. So on this 2.5 lakh, ITC is allowed, C and SGST. it has paid inward transportation expense of 30,000 to the tempo owner. Tell me, tempo owner is not a GTA person. We know that RCM provisions apply only on a goods transport agency. For an individual truck owner, tempo owner, horse cart, bullock cart, lorry owner, GST is exempt only on transportation services. So being a tempo owner who is not issuing consignment note, not a GTA, and therefore we will say that no GTA and this transportation service is going to be exempt only. If this is exempt only, then the point of taking ITC does not arise here. Then we say it has supplied goods of value 50 lakh to V Limited, Padra, Gujarat, includes 10 lakh supplied to SEZ. Total supply for 50 lakh. Out of which 10 lakh given to SEZ will be zero rated supply. The normal 40 lakh of course will be normally domestically taxable. So we say out of 50 lakh, 10 lakh supplied to SEZ will be zero rated, and on remaining 40 lakh, C and S GST liability will arise. Got it? Understood, ma'am. After that, it has purchased goods from X Impex Limited, Kadi, Gujarat for use as raw material in its factory. Value of goods 30 lakh. Invoices given. This is a very simple transaction. No adjustment only. We purchased raw material. We will take ITC of the raw material. What is the problem here? 30 lakh raw material purchased for business. You will take ITC of the same. After that, we availed supply of manpower security service from Y Limited, Vadodara, registered taxable person. Now see, for security services, for personal security services, manpower security services, if supplied by a person other than body corporate to registered person, then reverse charge mechanism provision comes. Here we have taken the personal security services from a limited company, which means no individual, no partnership firm, limited company, it is a body corporate. Provision says that other than a body corporate should have provided services to registered person, then for RCM security services come. But here supplier is a body corporate, therefore reverse charge mechanism, normally supplier will collect GST from me paid to government. So I can simply take ITC on this 1 lakh 9% and 9%. Say yes or no. So here we will say all ITCs we've taken, all the outward liabilities we have taken, and this only one thing you have to pay under reverse charge mechanism for the import. This also we have taken. There are no 42, 43 reversals, apportionments, nothing in this question. So simply outward minus ITC plus RCM, and you arrive at your final answer. Say yes or no, guys. Say yes or no. डन 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 डन. आर यू ऑल स्टिल विथ मी? जोश इज हाई, जान है, जिंदा हो, जल्दी से बोलो. Yes, ma'am. At least hit the like button, guys. We are literally solving questions from 2020 attempt till 2024 attempts. So 20, 21, 22, 23, 24. Not 5 attempts, 5 years, which means almost 10 attempts question paper RTP I am making you solve. The attempts which are missing here are simply the attempts where the questions were repeated in nature. Therefore, we have removed them. All the questions which are new, not repeated, we are solving in the session. Come on, literally, this video deserves the like. Chalo, let us now solve question 43. ABC Limited, a registered supplier, is engaged in the manufacture of dyeing machines. The company provides the following information pertaining to GST paid on the purchases made. And they are simply asking us to calculate ITC for September month. Again, this is not a computation question. This is not a computation question. This is a simple, you have to calculate the total ITC available. Let us start. Purchase of 10 Apple iPads which were given as gift to employees. Gift, section 17(5), anything given as gift, anything lost, destroyed, stolen, written off, given as gift, free sample, we know ITC is blocked. So gift is given, disposed by way of gift, I will say ITC is blocked. Payment for club membership according to employment, not a stat obligation. None of the expenses were incurred by a stat obligation. It is all the obligations company is doing on its own. Company is doing on its own without stat obligation. Again, section 17(5). ITC will be blocked, no GST available, no ITC available. Purchase of maxi cab for transport of its employee to and from home to office. Write the seating capacity 13 because seating capacity is not mentioned here. The question is saying that the seating capacity given in the question, you add this in the question, not printed in the notes. So add this in the question that seating capacity given is 13. Now here we will say this seating capacity given is excluding driver. This seating capacity is given is excluding driver. Now first of all tell me, we have to take the seating capacity always including the driver. So if seating capacity 13 is excluding driver plus driver, we will say that the seating capacity of this cab is 14. And now we know any motor vehicle designed to carry passengers up to 13 passengers, ITC is blocked. More than 13 passengers including driver, ITC is allowed. So 13 is excluding driver, which means including driver the capacity becomes 14. And for 14 capacity vehicle, I will say ITC is allowed. So here the ITC of 70,000 will be allowed to me because for this motor vehicle, the seating capacity exceeds 13 passengers including driver. See, 13 persons including driver, we will say more than exceeding 13 percentage, it becomes 14, 13 plus 1 driver. Therefore, ITC will be allowed. Next point, purchase of calendars and diaries for distribution as New Year compliments. Again, goods lost, destroyed, stolen, written off, given as free gift and sample. Free gift sample distribution we are doing. Therefore, ITC will be blocked here also. And last point, works contract service availed for erection and installation of RO treatment plant in factory. See, construction and works contract for immovable properties, ITC is blocked. But for plant and machinery, ITC is available. We are building a RO plant. We are building a RO treatment plant. Just because it is works contract doesn't mean ITC will be blocked. Works contract for immovable properties, we say ITCs are blocked. This is for a plant machine. Therefore, ITC will be allowed, and this is the total eligible ITC available with us. Say yes or no. Done, understood and clear, everyone? Yes, ma'am. Then moving on to next question. Messrs fly-by-night tour operators availed input tax credit in respect of certain transactions where no such supplier was existent or from, see, this is a pure theory question. I think they are simply asking that we did some sale. We availed credit without underlying invoice, or let's say we issued invoice without underlying supply, whatever it is. Can the government put restriction on us? Yes. We have studied rule 86A. We have studied rule 86A in the chapter of ITC, that even if the balance is available in your credit ledger, still government can restrict your balances available in credit ledger in all of these situations. There is nothing to teach here. This is a pure theory question asked in November 20 examination. You have to refer notes for this. The same 4 points written in notes are written here and the matter is over. Chalo. Now question 41. A company has entered to an agreement with a customer for manufacture and supply of cement pipes for their exclusive use. A company manufactured the product, but before receiving the inspection certificate, customer rejected some quantity of goods, and as per agreement, it is destroyed in front of customer. Matter is over. Any goods lost, destroyed, stolen, written off, given as free sample, ITC is always going to be blocked because these goods are destroyed. Because these goods are destroyed, we will say ITC will be blocked according to section 17(5). Tell me everyone, yes or no. Very simple question this was. We destroyed. Forget the entire story. The main point here is that the goods were destroyed. If the goods were destroyed, we will simply say ITC will not be allowed for the same. Done? Yes. Next question number 40. Paridhi Limited is a registered manufacturer engaged in taxable supply of goods. Paridhi Limited purchased the following goods. Again, they are asking us only to calculate the input tax credit. This is not a full computation question. No RCM, no outward payable. Only what ITC will be available to us for the month of January is what they are asking in the question. Let us start. Capital goods purchased on which depreciation has been taken on full value including ITC. If full value including ITC depreciation you take, then according to section 16(3), your ITC will be blocked. You can take either depreciation of the GST amount or you can take full ITC of the GST amount. You cannot take both. Therefore, section 16(3) will block the ITC of this 15,000. Understood. After that, goods purchased from Rupesh Enterprises. Rupesh Enterprises sent the invoice in January, but the goods were received in the month of April. Now see, here they are assuming. We have a similar question. We solved a similar question where they assumed that the June was in preceding year, etc. But now here they are simply assuming that invoice received in January and goods will now be received in the month of April. So they are themselves contradicting their own solution. We of course stick to the provision. And a normal person would always obviously think that if invoice is received in January, goods will be now only received later on in the month of April. Because goods are not yet received, we cannot take ITC of the same. Tell me, can anyone mention that question number that we solved where it was this mistake on assuming they had written no last year June? Which was that question? Can you tell me just? Anyone? See here. Here. Question number 45. In question number 45, what they have taken is, in question 45, they've assumed as if this June is for preceding financial year. And the similar language question here, they are assuming that April will be now the next April which is going to come. Now they are not assuming that this is the April of preceding financial year. Yes. So it is all ICI playing games with our feelings. Understood, ma'am. Chalo. So you can always refer question 40-45 together just to understand that in exam do not get confused if we normally stick to this provision only. That was one exceptional case that we saw in question 45. So invoice received in Jan, goods will now be received in April. Now before I receive goods, I cannot take ITC because it is condition of section 16(2). Therefore, ITC will not be allowed for the same. Got it. After that, car purchased, I'm sorry. Sorry guys. Chalo. Then car purchased for making further supply of such car. Normally, if you purchase car for further supply, ITC is allowed. But car is destroyed. Again, we know any goods lost, destroyed, stolen, written off, given as free sample, ITC is going to be blocked under section 17(5). Telecommunication tower, ITC blocked. Telecommunication tower, pipeline outside the factory or any land, building, civil structure, we know ITC is going to be blocked. After that, goods purchased from Sumo Limited. Full payment has been made by Paridhi to Sumo against such supply, GSTR 1 filed, but tax was deposited in April. No problem. We know that after the end of financial year till 30 September also, we have studied this in rule 37A, that after the end of financial year till 30 September also, if my supplier deposits the GST, no problem. I am still eligible to claim the ITC. So this 10,000 ITC I can take because supplier has not even paid taxes today, it's fine. Before 30 September he has paid, no, the credit is reflecting in GSTR 1, no problem. I can take credit of this 10,000. Truck purchase for delivery of goods, again ITC allowed because for whatever motor vehicle you are purchasing for passengers, ITC is blocked. For goods, ITC is allowed. For passengers, if you are purchasing a motor vehicle up to 13 passenger seating capacity, then ITC is blocked. But for transportation of goods, if you are taking any motor vehicle, then according to section 17(5), it is not blocked and ITC will be allowed. So only 2 ITCs allowed in the entire question. Rest everything is blocked here. Say yes or no. Understood, clear, everyone. Done. We are left with only 9 questions, but these 9 questions will still take more 1.5 year. 1.5 hour, right? Because on an average, every question is taking 10 to 20 minutes. So somewhere between 15, 16, 17 minutes we are taking in every question because these are full computation question. Is it okay if we end this session now and we continue this in evening? These 9 questions, I just need 1.5 hour. So we can meet again in evening at 7 or 7:30. I'll share the time in Telegram channel and we can complete this. Because for question solving, I have to continuously speak a lot. Too many things involved. I have to see the comments. I have to read the questions. I have to solve. I have to calculate and I have to explain also. I am actually tired. If it's okay, we can just continue in the evening. Done. So these 9 questions, these are big questions also actually. None of them is a small question. They are all full computation question. So right from question number 31 till 39, 9 questions, we will continue the evening. See, I have already uploaded a video. I have already, see, I will just show you that video also. See, content. I will show you this video. See, we have this question answer solving playlist on YouTube. In this question answer solving playlist, you will find these two videos for ITC. This grey thumbnail and the pink thumbnail. This pink thumbnail contains all the questions starting from question number 1 till question 30 of the question bank that we are using. So question 1 to question 30, all the questions are covered in this video. All the questions are covered in this Q&A solving video, all 30 questions. Then starting from question number 40 to 51, we have completed all in this video. Now one more video we will take where we will, in the evening, where we will complete question number 31 to 39, and all the 51 questions, which includes everything, ICAI, SM, past 5, 6, 7, 8 attempts, whatever is important, question paper question, RTP, MTP, everything, all 51 questions I have made you solve on YouTube itself only. Nobody does this in a regular batch also. We are doing it on YouTube, right? All you have to do is share it with your friends, enemies, seniors, juniors, everyone, crush, ex, share it with everyone. Like, share, subscribe. And after I end the live stream, do drop a comment about whether you enjoyed the session or not, because your feedbacks of course will be valuable, and the students coming to this video later on, of course, after reading your comments, will get a confidence, put some timestamps or whatever it is, you know what to do after the end of the stream. For the there is a separate playlist for question answer on the YouTube. Just go to the playlist section. Go to the playlist section of the channel. You will find question answers of almost all the major chapters that are there in your syllabus. We have solved not just ICI SM, but also RTP, MTP, past paper questions, everything we have solved. You will find everything in this question answer playlist. Just make sure to like, share, subscribe and comment. We will meet in the evening to solve the remaining 9 questions, and then we are done with all 51 questions of input tax credit. So see you all in the evening. Till then, take care and bye-bye everyone.